that you have cracked some large deal worth 25 crore from insurance company. So, firstly, are you in talks with some other insurance company? And as you said, you are seeing a good traction from insurance sector. So, does this 25 crore order categorize a large portion of that inquiry which you are seeing, or you are seeing from other players also?
So thanks, Mohit. So Mohit, when I say that we are looking at government and insurance sector, we are looking at building. If you look at today, the revenue share of government and insurance in the company is less than 20% of the overall business. So our aim is to make it to a much larger. We want the government and insurance together probably to reach around 40% of our business, which does not mean that it is tied to one deal. Though the deal we are talking of insurance is a large deal, but that is not what we are referring to. We are referring to broader funnel which we are building across markets like India, Middle East, APAC and US insurance. And also our initiatives of government, especially in markets like Singapore, Saudi, Kuwait, and some amount of also in India, which we are hopeful that the market will recover. And so we are talking these as a broader strategies to really build sizable businesses in these areas. And what we are excited about is the funnel which we have started to build in these cases and some of the early interest and early wins we have gotten that. We closed a deal of insurance this time in Middle East. We closed a deal of insurance in India of that. So these are two good deals and they are sizable deals. Similarly, we closed a deal of government, one in Middle East, and we expect next quarter also to have some more strong momentum on this. Thus, we expect this to be a kind of a growth driver going forward.
Okay. Also, this 25 crore deal which you have cracked with some large insurance company, is this from the Middle Eastern region or is this from India?
So this deal is from India. This is from India market. A part of this revenue has come in as license, but the subsequent part will be executed over next 18 months.
So it's a 18 months project.
Yeah.
Okay. And my second question is that in the Middle East sector, in the Middle East market, you said that you want to grow and you are seeing some good footprints there. So, wanted to know that which area or which region are you specifically targeting and in which domain do you want to grow your footprint?
Point, we are already in Middle East in a large way, and it also will almost gives us 37% of business. So we are almost established in all countries. So there is no new region. It is the same region. So, but the business, predominant business which we do is from countries like UAE, Saudi, then some amount of business from Oman, and then later also looking at Qatar and Kuwait as the market. Beyond that, also Africa countries like Nigeria, Ghana, they have been strong countries for us. And Kenya, we have got at least 6 of the top 10 banks. So we are looking at exactly the same market, but we are also looking at more use cases in this banking as well as getting more revenue in insurance and other segments.
Okay. Thank you so much, sir. And all the best.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Mohit Motwani from Tara Capital. Please go ahead.
Hi, thank you for the opportunity. I'm fairly new to the business. I have 2 questions from my end. One is on your US mature market. On the mature market side, you said US is relatively showing some weakness. So just wanted to understand if this weakness is being experienced on the industry wide across all other of your peers as well, or is it because of the tough macros? And that is the first question. And on secondly, some of the IT service companies have spoken about some green shoots and recovery around the BFSI space. Now, is it that the spending on software products comes on the lower pecking order for these banking companies in these US markets, or how does it work there? If you can shed some color around these. Thank you.
So Mohit, thank you. So first of all, Mohit, our peers operate slightly in a wider and a very different business, and we are still in a product business focused on typically transformative products. We are typically, while our peers look at the larger business and their business is more mapped directly to the industry. Having said that, there are 2 things. One, as we have pivoted to larger accounts, then our peer accounts and our accounts tend to be same. So their behavior tends to be same. So, they have the same problems. If they're not spending, then they're not spending also on new initiatives. So I hope that there is a correlation on that. But today also at the size we are and the kind of challenges we take for ourselves in terms of growth rate, we still think that we are decoupled from a larger problem in the industry. We need to first make sure that we establish ourselves, get our first 5-10 large banks in, and then replicate from that. And then we can look at, once the accounts are very large, then we can look at whether we are connected. So I'm not the right person to answer that, because we don't operate in the industry of our peers. We are still a very niche product company solving problems, very specific problems to our customers on that. So green shoots of BFSI, again, I have the same opinion. We have been always, the customer's interest in the products kind of which we propose has been always there. What we have found challenges in our ability to close in terms of the conclusion of those deals happening. That's taken very large time. So I'm sure if the market and the economy overall recovers, if some amount of decision cycles become fast, then we should be able to see better results. But beyond that, I really don't have that much of insight into what's happening broadly in the market.
Sure. Thank you. And one more last question. So today, your revenues are largely, linked to banking side of things. Do you expect that this mix will change in the coming years and your insurance and other verticals will gain up in proportion to the overall revenues in the coming years?
Yeah, we hope. See, we have drawn an internal plan to, kind of build the insurance and government business to a larger number. But having said that, we still think that banking will keep on being the largest segment. Whether it's 75% or becomes 60% of the market, that will depend on how fast we can scale the other businesses along with that. But the idea is exactly to at least have a substantial dollar value coming from insurance as well as government.
Sure. Thank you for answering my questions. Thank you.
Thank you. The next question is from the line of Rahul Jain from Dolat Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just trying to understand that what are the initiatives we are taking to ensure that our pipeline continue to enhance, given that we grow by 25% ballpark, and the size of it also in terms of scaling up the deal sizes. What are the initiatives we are taking, because as we become a slightly larger organization than what we were a couple of years ago, we need to increase the size of the deal to ensure that with a similar win rates, we end up growing much larger entity. So any initiatives on these fronts that you could talk about?
Rahul, thanks for your question. So predominantly, what it is, for us, the way it has worked in the past is exactly what we are doing in the future. As we are deeper into the verticals, we end up creating more and new solutions and making our offerings very wider, especially if you look at banking or insurance. We have more products to offer. So one amount of our deals, lately the products which we have created, whether it's captive finance, digital lending platforms, trade finance, these itself tend to be larger deal sizes. And then we have opportunity to not only go and upsell it in our accounts, but also we go and sell the same things into new logos. So one way of increasing our funnel or deal size, or what you call the overall coverage, is to create more offerings in the same verticals. The second thing, which is predominantly driven by investment in sales and marketing, which is a substantial investment, is to go wider in the market. And so, because still globally there are more than 50,000 banks, we are hardly in any number. So there's a huge market to be captured. So we do both from geo expansion, we look at better penetration. In that cases, we are doubling down on initiatives which are really helpful to do lead generation in that. The two larger things which give returns on every company today is digital. So our digital budgets keep on growing, our digital plans in terms of enhancing how can we get more of inbound through digital channels. And second is typically being in front of the customer. That is our ability to be in analyst quadrants, all the events, industry coverages. That is what we are doubling on. We are increasing our budgets in marketing, our go-to-market activities, so that we are having the larger funnel. So one is the broader coverage of the market as well. The second is typically deeper penetration into each of those accounts by having more solution offerings. These things have really worked for us over the last 5-7 years, and that's what we keep on doing.
So, yeah, one interesting point that you mentioned is that, mining the same account by scaling up more offerings within the same customer base. So have we seen several such instances where people might have started with a smaller deal, but then we have sold them loan origination or trade supply or bigger products compared to the process offering that we initially used to sell a couple of years back? I'm sure there are good case study, but are there meaningful upsell that would have happened? Anything that you could share on that front?
So, Rahul, exactly, I think that's core of our business. So if we look at our growth targets of next year, we almost rely on 50% of that growth coming from upsell to our existing accounts. And that's historically, if you look at also today, number of deals which we come up. When we talk of new logos, we may have anywhere between 10 to 13, 15 logos a quarter. But then if you look at deals, we may have more than 25 deals in a quarter, and those other 12 deals are in the existing accounts. And those existing account deals are of sizable deals. And I think if you look at even the disclosures which come in terms of materiality, they are equally spread, both in new deals as well as existing deals. So there's a good evidence and history, and in fact, this is the core of our business, our ability to go and upsell. We remember accounts which started with a kind of an annual revenue of 1 crore, a large bank now going up to annual revenue of 20-25 crores. And this has not happened in one account, this has happened in at least tens of accounts for us.
Yeah, Jeet, I completely understand what you said, and we appreciate that. What I was specifically referring to, some of your larger offerings that have become more recent, for example, like trade supply or loan origination, bigger, I mean to say cases where the deals were much bigger relative to your historical benchmark.
So I think 80% of the large deals brought both for train or digital lending have come to existing accounts, and 20% have come to new logos.
Right, and there are more win rates even after going live, because that is what would be the key matrix. Whether are they moving from one module to more, something like that.
Exactly. So I think that's so because if they become stale, they are not going to buy the next product from us. So every 2 to 3 years, you have another very large deal happening. But even between that 2 to 3 years, there are other components being sold, whether they are horizontal product components or other smaller solution components.
Appreciate it. Thanks. That's it from my side.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Dikshant from DB Wealth. Please go ahead.
Hi, congratulations on great numbers, sir. So my first question is basically, since we are so much catered to the banking side of the business and we have helped them grow in a lot of ways, that's why they keep giving us good, bigger deals. Can you just highlight one or two particular products that help our clients grow? That's why they are coming back to us. The idea of asking this question is for we can understand that what makes them keep coming back to us and growing this, so that we can, make this cycle bigger and bigger as the time goes by.
Okay. So yeah, so just a way to explain is to understand what we sell. Predominantly what we sell to the enterprise is a system which is called, our product is called Newgen One or IBPS and OmniDoc. This sits between core banking, their all other systems and all other peoples and interfaces. So what happens is any digital transformation project which they take, that is broadly implemented on this platform for most of the use cases. So once you implement the use case, the way that they are buying this is they are buying this platform to make sure that they don't have too many softwares and too many vendors. So if you are able to make a successful case, it becomes natural to go and implement another case on the same platform. Because finally it's typically a low-code way of doing it, it's loosely coupled, it's built for change, rather than going and buying point solutions. So our story and journey for all these 15 years has been that once you've implemented a product which the bank users or insurance users are using, whenever there's a next opportunity to transform the journey or transform the journey in another area of business, they end up leveraging the same platform. So we end up getting an ability to go and upsell more licenses because of usage, as well as the customer ends up using the same infrastructure and leverage the same knowledge base which is around the system for other processes. So the examples would be, if you look at 10 years back, we were selling some things like around systems of centralization, or what we call a BPM or a workflow systems. From that, we pivoted to a lot of systems where we sold about what we call digital onboarding. These days, it's our end-to-end digital retail or trade or service request management or collection systems. So these are examples. Most of our marquee clients, you will at least have 3 or 4 of such solutions rather than one.
So if I'm understanding this right, is this basically we are selling them a better efficiency for their team rather than helping them gain their sales directly. So it's indirectly because their efficiency is growing, their team is able to make more sales by increased efficiency. Is that the idea?
Yeah, so basically we are directly putting systems. We end up selling where the customer is implementing systems for growth. And the growth is driven out of 2 things. I think 10 years back, it was driven around centralization. It is about efficiency, what you call turnaround times. Nowadays, it is about build around engagement, straight through, low touch, no touch. So can you reach customer? Can you, solve a loan in half a day? Can you open account immediately? So again, you need an orchestration. So to open an account instantly, you need to reach the customer, you need to orchestrate the journey, you need to integrate with all the digital stacks, you need to implement complex workflows and complex rule engines through a single platform. So this is exactly what we do.
Okay. My last question is on our general cycle, on our profitability and growth cycle. So on the accounts we see, so the second half of the financial year, we have more sales and earnings realizations. Is that correct, or am I looking at it the other way?
No, I think this business is slightly back-ended towards Q3 and Q4, where larger license deals end up happening. It's a history of every software license product company which has perpetual license. So roughly around our distribution today is roughly between somewhere 42 to 44% in H1 and between, the corresponding remaining in the H2 part of that. So we do expect that even this year it is going to be slightly back-ended on that. And but as the company becomes bigger, I think this whole skew is slightly shifting and reducing slowly.
Got it. Can I ask a follow-up question, please?
Please go ahead.
So the growth that we are expecting and that we are so much focusing on, you said that the new labels that we don't focus on new labels rather than we focus on, making our existing business grow. In the next 3 years, is the goal remaining the same, that we are going to focus more on existing labels, or is it going to be much more that we will now focus on getting new customers? Or is it in tandem, both things are going to go side by side?
Yeah, Rishit, I think probably you got me wrong on that. I think what I said, the potential is large in existing accounts and we have an ability to grow. But our predominant effort in sales and marketing is for new logo acquisition. I think we measure our success by our ability to win new logos. And because that is where because once you win a logo, all other stories unfold. You are able to sell, you are able to upsell, cross-sell. But if you don't end up selling to new logos, you will not be able to grow beyond a particular point. You can grow for short term. So our whole focus is predominantly, you can say 70% is on new logo acquisition and 30% is on mining.
Beautiful. Thank you so much, sir. Thank you so much. Best of luck to the team.
Thank you.
Thank you. The next question is from the line of Chirag Kataria from Ashika Institutional Equities. Please go ahead.
Congratulations on a good set of numbers. I have a couple of questions. So, please back guiding that we have an intention to reach around $500 million kind of revenue in next couple of years. Is that still intact? And by what year we aspire to be there on the milestone which we spoken earlier? And second, the number of logo addition which we are providing every quarter in the presentation, how many of them are active and giving business on regular basis? At aggregate level, whichever logo we have disclosed so far in the presentation. And third, what average engagement size are we looking whenever we empanel any logo with us, and even from the current empaneled logos and from potential one? Yeah, that's all from my side. Thanks.
So Chirag, thanks. Our ability to reach $500 million depends on our ability to execute. The business has got enough potential. The market segment and the addressable space for us is quite large. And we have seen peer companies in other markets, especially in geo markets, in geos like US, have reached revenues of $500 million, $1 billion, and they have started almost either slightly earlier than us or slightly later than us. So the market potential is there. We have drawn aggressive plans for ourselves. We have aligned the strategy for that, and we are aggressively investing on that. As the results start unfolding, as the areas start giving us returns, you will see that the revenue mix, and we hope that our growth rates start accelerating from even the current growth rates out there. But pinpointing exactly a date and year is something which it's an aspirational plan. We have to translate that aspirational plan to execution, but we have not completely translated into a target in number of years. So I think if you track the story, I'm sure that in next 3-4 years, you will see that we are not very far from there. On the logo retention, the number of new logos or whatever number of logos are the logos which are giving us business. That's how we count it. And we don't count anything else who does not give us business. Our retention rates are pretty high for all businesses which are sizable size. So anybody who's giving us a recurring business of 50 lakh, we almost will have 95 to 98% retention. So on the smaller logos or what you call partners which were pivoting up, there's a higher churn rate. But roughly, I think today we may have somewhere between 520 to 540 clients, which are typically you will see they will keep on growing by 20-30 clients every year as we are now pivoting to more larger deals. Our engagement size, our preference of engagement size is broadly to understand that we generate at least an annuity of 100K to 200K. So that means any deal between 500 to 700K to start with, going up to 2 million is the sweet spot where we do business today. But then there are deals which are sometimes smaller than that or predominantly larger than that. So that's where we are. I hope that answers your question.
Yes, thanks for answer all this question. Just one follow-up if I can. So going forward, at the healthcare practice, what percentage are we looking to have in overall pie? Is it similar to the portion that we have at BFSI right now, or the second order will remain on healthcare side rather than the BFSI one?
So, we are predominantly looking at 3 verticals. One is banking, and the other is insurance, and health care also we look at health insurance market. It is not healthcare as a segment. So when we say healthcare, it's about payers, and predominantly in US, this market is more active out there. So these markets we expect to get us multi-million-dollar businesses, but still we think the banking is going to be predominant large number. They may struggle to reach a size of banking unless we really hit a jackpot about some industry and we replicate very fast. But I hope that insurance and including insurance, health and government should be sizable and material businesses for us. And we do expect in next 3 to 4 years they come very close to banking. Maybe they become both together become equal to the size of banking.
Thank you so much. All the very best.
Thank you very much.
Thank you. Ladies and gentlemen, that was the last question for today. We have reached the end of our question and answer session. I would now like to hand the conference over to Ms. Dipti Mehra-Chugh, Head Investor Relations, for closing comments.
Thank you so much everyone for joining us for the call. For any further questions, you can connect with me or you can go to our website. Thank you.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us. You may now disconnect your lines.